Good morning. This is Rob McDougall with Zhang Financial here with your weekly economic update. Today is Monday, April 24th, 2023. So last week we had a very light calendar of economic releases. There were only three of importance. All three were real estate / housing related. But it was also the beginning of the first quarter, or one of the heavier weeks of the first quarter corporate earnings cycle. We'll talk about that in a little bit. In terms of the housing-related indexes, we had three of them that were reported, and all three were pretty uninspiring. Of course, real estate, as we've talked about, has been hurt probably more than any other sector by the increases in the Fed fund rate increases over the last year. So on Tuesday, we had building permits, the March building permits. That came in at 1.413 million, very close to consensus, but down significantly from a large bolus that we saw in February, which came in at 1,550,000. So building permits pretty close to consensus. Housing starts a little bit weaker than consensus for March. Expectation was about 1.46 million. It came in at 1.42 million. Then on Thursday, we had existing home sales for March. That came in a little lower than expected as well. Expected to come in at 4.5 million, came in at 4.44 million. So not a big deal. None of those three were large market movers. In terms of expectations now for Fed rate increases, so the Fed will meet next week. The FOMC meeting concludes, and the discussion will occur on the 3rd of May in terms of what they're going to do with Fed fund rate. Expectation for an increase is pretty much as it was a week ago, about 86% probability that they are going to raise 25 basis points. That's pretty much baked in. However, the expectations for the rest of the year still remain. I would say on average, there's an expectation of 2 cuts at least by the end of the year. So expectation by many market pundits, first quarter GDP, we'll talk about that in a moment, going to come in pretty solid, but it's been tapering off. So I would say the base case for most economists is at least a mild recession occurring at some point here in 2023. So again, by the end of the year, the expectation is 68% probability that we're going to see at least 2 cuts from what we'll see next week with the 1 increase or 1 increase or 1 decrease from where we're at right now, which is 4.75 to 5%. So GDP expectations for the first quarter, the Atlanta Federal Reserve that we track most every week, their expectation increased again. It's really flopped around over the last 4 weeks, but increased back to 2.5%. Now, next week, we're going to get the GDP number. We'll talk about that in a moment. But the Atlanta Federal Reserve increased their expectation from 1.5% increase in the first quarter to 2.5%. Inflation's expectations, as we always refer to the 10-year break-even, pretty much flat last week at a very low level of 2.3% inflation expected over the next 10 years. I mentioned that we had a lot of S&P earnings last week. That was better than expected. They weren't great, but definitely better than expected. So far here for the first quarter, we've had 18% of the S&P 500 companies that have reported earnings. Of those 18%, 76% of them have beat estimates, which is really close to the 10-year average. So that's very solid. So consensus expectations now for the first quarter has become less negative over the last couple of weeks. 2 weeks ago, it was negative 7.5%. Last week, it was at negative 6.5%. And at the end of last week, it came down to a negative 6.2%. So I would call that a very solid start for earnings. This week, not to preview it, but just to mention, we are going to have several large cap tech companies that report. So earnings really will probably drive market returns this week. We've got Microsoft, Apple, Google, and Meta/Facebook that will be reporting. So market returns last week off that just 3 data points, economic data. Nothing really happened last week. S&P 500 was barely down. It was down 10 basis points. U.S. returns were led by small cap, Russell 2000 up about 70 basis points, 0.7%. International equities also pretty much flat for the week. Developed market was actually strong, but was offset by China. China was down 1.4% on the week. Fixed income returns, they were negative last week. The 2-year yield was up 6 basis points. The 10-year yield was up 5 basis points. So last week, the Bloomberg U.S. Aggregate Bond Index was down 23 basis points. So let's switch, take a look at upcoming week, the economic data that we're going to see this week. Unlike last week, this is a very busy calendar. So a lot going on and a number of corporate earnings. I've already mentioned some of the tech names. But starting tomorrow, Tuesday, consumer confidence. This is the U.S. government's version. Expectation is pretty much flat. March, it came in at 104.2. Consensus is 104.1. So expectation of flat consumer confidence. Tuesday, also new home sales for March. Expectation very much flat. Last month, it was 640,000. Expected to come in for March at 630,000. The big one next week, Thursday, U.S. GDP growth, as I mentioned. Atlanta Federal Reserve took their estimate back up to 2.5%. Consensus, however, is at 2.0%, and we'll compare that against the fourth quarter, of course, which was a positive 2.6%. Friday, a lot of economic activity in terms of data that will be released. Employment cost index, that is for the first quarter, is expected to be up 1.1%. This is a quarterly index. It was up 1.0% in the fourth quarter of 2022. Personal income for March is expected to be a positive, this is month over month, a positive 2%. In February, that was a positive 3%. Also, personal spending for March is coming out on Friday. This is expected to be a negative 0.1% versus a positive 0.2% in February. And either last week or the week before, we showed what has been going on with retail sales. So this personal spending going into the negative territory is not a surprise for us. Also on Friday, this is going to be probably market-moving PCE prices for March. PCE, again, personal consumption expenditure. That's the Fed's preferred inflation metric. It was 0.3, positive 0.3% month over month in February. The expectation is down a little bit to a positive 0.1%. And then lastly, PCE prices core minus food and energy is expected to be flat in March, plus positive 0.3%. It was the same thing in February, positive 0.3%. So that's it for the weekly economic update for this week. Thank you for your attendance. Look forward to seeing you next week. Thank you.